Ladies and gentlemen, plenty of topics to get into today. And I say plenty of topics. Usually I have one or two main topics of the video, but this time I've got about 6 or 7. And that's because I've done a community poll. I've asked you guys what you want me to talk about, what I think about certain things, etc. And you've told me, right? You've asked me questions. You've thrown me a couple bones, and I'll go chase them down today in regards to 18.6-year real estate economic cycle, in regards to the 4-year cycle, in regards to the double top in the last cycle or the alleged double top, in regards to AI trading, in regards to the current structure, in regards to altcoins, how we should react to altcoins right now, in regards to where my cutoff level for the end of the bull market is, and in regards to whether it's possible to reconnect to the 4-year cycle if it does end up breaking. So lots of questions, and I'll actually go ahead down below and I'll put timestamps for when in the video I answered each specific question. If you're not interested in some and you're interested in others, you can use those timestamps to get to the right part of the video. So should be very informative. I'll try and keep my answers relatively brief for the sake of just simplicity. Just know that I could dive into these topics very, very heavily if I wanted to, but I've got to get through about 6 or 7 of them. So we may as well keep it sharp without sacrificing quality where possible, of course. Before we get into it today, guys, we have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses and you'll help out the channel. I appreciate that, guys. Let's get into the content. Right, guys, we'll just start from top to bottom in no particular order. This is not from most important to least important. We're just going from top to bottom. And I'll elaborate a little bit on the questions and abbreviate a little bit just to make them very, very clear for the audience. So this question is basically asking, what do I think about the 18.6-year real estate economic cycle in regards to what's happening with cryptocurrency? Because this cycle, this 18-year cycle, has been around for the entirety of the 4-year cycle's lifespan, and now we're actually coming to the end of the 18-year economic cycle, and could that have an effect on cryptocurrency? Could that have an effect on the 4-year cycle? Well, I think the important part to note here is that the 18.6-year real estate economic cycle is actually very helpful for the 4-year cycle. It's coordinated within the 4-year cycle in a lot of ways. So we've got it right here on the screen. Now, I could go into very intense detail on describing all the nuances of this, but basically I'm just going to show you this chart just to keep it short and sweet, and you can do more research on it if you want. Basically, there is a real estate cycle, a real estate economic cycle, okay, in the United States of America specifically, but also spreading across the Western world, generally speaking, that lasts about 18 years. You can see this is the general gist of it, and you can go into the charts yourself if you want to, but generally speaking, this is how it goes. Okay, so we'll just go over this cycle so far. The start of the cycle was 2011 after the financial crisis in 2008, 2009, and recovery in 2010. That was the startup of this cycle. We started going upwards. Then we saw a crash down during COVID in 2020, the mid-cycle slowdown. We saw some stagnation, consolidation. We saw in 2021 starting to rise back up again, continuing to rise ever since then. And right now we're on the 2025/2026 phase of the cycle, which is when we see the peak and the collapse and the major recession. The whole idea of this is that every 18 years-ish, it's not exactly precise, but every 18 years-ish, we see a major recession. And within that 18 years, we can split it up into increments of 7, 7, and 4, making 18 total, okay? So the first 7 is characterized by slow upwards trend, and then a mid-cycle slowdown at the end of the first 7. The second 7 is when you see peak parabolia, and the last 4 is generally when you see the recession and major cool off. And you can pause the video and see the exact dates for each single time this has happened, and you can validate that that actually is real. This is not just made up. This has happened historically. Now, I've always seen the 18.6-year real estate economic cycle as a supporting factor of the 4-year cycle. It's something that actually helps the 4-year cycle in a lot of ways, because if you look at what's happening here, well, you've got the entire cycle playing out. Obviously, Bitcoin hasn't really been around for that long. It only really started around the same time as this 18.6-year cycle started. But basically, the major collapse and peak, before the recession is 2025/2026, at the end of 2025. And that is when the 4-year cycle says the bull market top will be in anyway. So if we did see a collapse and recession as per the 18.6-year real estate economic cycle, it would actually line up with the cryptocurrency bear market anyway. And so it would be coherent within the bounds of the 4-year cycle. So I've never really seen it as a point of concern. I still don't necessarily. I actually think it helps the 4-year cycle in a lot of ways because, of course, before the recession, we see a peak. We see a parabolic move to the upside, which is what we're meant to be seeing right now. We are actually, if we're just being a little bit honest here, we are seeing it in a lot of ways, okay? Realistically, Bitcoin still is at very, very high prices. The structure is just getting damaged more by the day, but the price is still very high. And the same can be said about the S&P. So I don't see the 18-year cycle as a threat to Bitcoin. I actually see it as a supporting evidence for the 4-year cycle. But I suppose there is something there. I understand what you're saying. I understand where your concern comes from. This would be the end of the entire 18-year cycle through which Bitcoin has been around the entire cycle for. So the entire history of this 18-year cycle is basically the entire history of Bitcoin. And now we are resetting. It's ending. And so that could have an impact on Bitcoin. We could, again, it's just like anything we've always said on this channel. The 4-year cycle can end, and it will end eventually, but it hasn't ended yet. And until there's evidence that it's ended, everything that says it's going to end is kind of just a little bit irrelevant until it's actually proven. Next question. What are your thoughts on the first top of the last cycle being the actual top? And if that is true, what are the implications for this cycle? Well, I don't agree with that fundamentally. I think it's just not true. And we're going to be talking about 4-year cycle a lot in this video. I apologize for saying that word over and over and over again, but it's just the case. The fact of the matter is the 4-year cycle directly predicted using two aspects of its umbrella trend of 6, the top in November 2021, okay? The days from top to top and the days from halving to top exactly predicted that a 2021 November top was going to occur. And a 2021 November top did occur as per the price action. We went about 10% higher on the Bitcoin charts in November. And it's important to note, it wasn't just Bitcoin that did this. The Bitcoin dominance chart reached new lows and the total cryptocurrency market cap went upwards about an extra 20% in the second half of the cycle. 20% is not a small margin for error. 20% is a significant move, okay? To act like a 20% move on the second top higher than the first top is a double top is ridiculous. You're stretching the definition very far of a double top in that case. Another reason why I believe this was the quote-unquote real top, other than the fact that it just literally was in price, is the simple fact that in the following bear market, right, the trends that have existed on Bitcoin, the trend that is 400 days from the top to the bottom, which is an absolutely crucial component of the 4-year cycle, as well as the trend of 1,400 days from bottom to bottom, which again is a crucial component of the 4-year cycle. You can see the color coding here in orange, okay, and in green. These two measurements in orange and green, they were both coherent as per the top date, right? So if the real top, quote unquote real top, was back here in April 2021 instead of November, we wouldn't have seen the bear market bottom play out where it did. We would have seen the bear market bottom play out earlier, and it would have been coherent with the first top, but instead it was coherent with the second top. So it's actually cross-validated as the quote-unquote real top on two levels. One level is we simply went higher, and the second level is the bear market bottom being where it was, validated it as the quote-unquote real top. So I think what happened in 2021 was we just ran out of time. We had this significant mid-cycle correction, and we just ran out of time to keep going upwards, and we just happened to top out there, and it looked like it might have been a double top because we were relatively close to where we were in the first peak. But the fact of the matter is we just ran out of time, and we couldn't go any higher in time for the 4-year cycle to end. So no, I don't think it was a double top. And even if it was, by the way, I don't think that would change much. I understand what you're trying to say, and people have tried to say a few times that the whole premise is, well, basically, if we topped out over here in April instead of November, we'd actually be topping out this cycle about 7 months earlier or 6 months earlier, and that would make the top around April, which is next month. Well, first and foremost, we'd have to actually go to a top in the next month, which, that's a whole nother story in itself. But second of all the data since then is actually incoherent with that. It doesn't make sense. Question about AI trading, fundamentally. Do you think we will see a new meta in trading once all retailers get their AI agents that will trade on par with Wall Street traders in terms of emotion management? No, I don't. I don't think we'll see a new meta of trading. I don't think that AI trading or bot trading will ever take off massively, and I'll tell you why. AI trading or bot trading can only really work in a market in which human emotion is the dominant driving force of the market. We can only do TA. Analysis only exists when human emotion is present. If you have a market that is dominated by AI and trading bots, human emotion is no longer present. You literally have algorithms working in the market, and the algorithms that they are built upon are algorithms that are used to predict price events based on human emotion. So as soon as those algorithms become the dominant force in the market, they'd stop working. They'd actually implode on themselves because they're not programmed to predict price action based on AI traders. They're programmed to predict price action based on human traders. So as soon as humans lose dominance of the market and AI or trading bots become dominant in the market, the AI and trading bots actually stop working and become obsolete, and humans will regain dominance in the market just based on how the market works and how you establish formulas in financial markets. That's how I see it anyway, and I could be wrong. Maybe I'm missing something there, but to me, rationally, it just doesn't make sense for a market to be dominated by AI or trading bots. Next question, which I'll just abbreviate quite heavily. He's making a point that we saw a very long consolidation last year in the structure of a descending channel formation, and that we could be seeing something similar this time. He's also making a point there is a ascending support line from 2023. So I've just drawn everything in the way I see it right now. And, basically, yeah, I agree. Of course, we saw a massive consolidation last year, descending channel formation. And I do agree that there is a potential support line here from 2023. As you can see right there, I've drawn it diagonally. Those things are true. As for a descending channel right now, I don't really see a descending channel. I will say that. There's no parallel lines here. There is a potential descending wedge perhaps forming, something like this, but I'm not too confident in that bottom line. I think we need a little bit more evidence and data there. I think these two wicks here were placed during a period of high volatility. I'm not too confident that this bottom line structure would hold, so I've made it dotted just so it's basically more speculative. But yeah, I think you could have a case here that, perhaps we consolidate until we get down to the bottom and we line up with that ascending support line, and then we bounce and break the structure to the upside and continue upwards. That would be pretty ideal because it also line up with a critical horizontal support zone around 74,000, and we could bounce with that horizontal support zone and the diagonal line and the wedge itself. So yeah, there definitely is a bull case to be made there, and that's something I'll discuss in future videos for sure. Does Wolf still believe in the 4-year cycle? I'm compelled to say yes via rational analysis. The 4-year cycle is all Bitcoin has ever had. It's still going until proven otherwise, and for that reason, I have no real reason to say I don't believe in it. I believe in it until it ends. That's how trends work. The trend is your friend until it ends, and that's how macro trading should work. But that does not mean that I'm going to blindly hold my bags while the evidence continuously stacks against it. Right? Just because it's not disproven yet, and just because I still believe in it because it's not disproven, that doesn't mean I need to put all my eggs in one basket and hold until it breaks, because eventually it will break. I believe in it, but eventually it will break. It's not going to last forever. It's just a matter of when. So knowing that there is a possibility that it will break means that you become more rational in your decision-making in regards to holding assets in bearish trends. If we're not going to get 100x on our altcoins, would it be better to convert them into BCC? Well, obviously I can't tell you what to do with your money, and I'm not going to legally, and I'm just not going to personally. What I can say is this. If there is no Bitcoin bull market, there is certainly no altcoin bull market. So if you are convinced, and I'm not saying you should be, I'm just saying if you are convinced that there is going to be no altcoin season and that your altcoins are destroyed, flipping that money into Bitcoin isn't really going to do much, because under that circumstance, Bitcoin would be going down as well. Now, if you are convinced that Bitcoin's going to be going upwards, you probably stand to reason that altcoin should be going upwards too. It's either a complete bear market or it's a complete bull market, right? I don't really see the point in holding holding Bitcoin in a bear market just because it's doing better than altcoins. It's still doing terrible in comparison to holding stablecoins. So that's an analysis there. Here's a question about my bear market validation zone. When would I say that it's over? And when would I say that any bounce would be considered a dead cat bounce that is doomed to fail? As I've said before, it's very difficult to answer this question because, again, my whole reason for being macro bullish is the 4-year cycle. And the 4-year cycle is not based on price, it's based on dates. So we won't really know for 100% certain that it is over until we see the date of the suspected top as per the 4-year cycle pass and Bitcoin not be at a top. That's the only thing that would break the 4-year cycle. Getting to November and not being at an all-time high. That would definitively break the 4-year cycle once and for all. But we can have regions in which we're pretty confident that it's going to break. Because obviously waiting around until November is not going to do us much good because the market could be down very heavily by then. But as I've said over and over and over again, I think that if we break the weekly chart Gaussian channel, as well as break below the support region around 74,000 to 70,000, which is a characteristic of our prior macro range, the top of our prior macro range, I think enough would be gone for us to be very skeptical of any future bounce at that point. And last question, if the 4-year cycle breaks, is it possible to reconnect to it later in a couple of years? Hypothetically, it would be possible to some extent. However, the 4-year cycle at that point, if we reconnected to it after it breaking, would not hold the same amount of meaning as it does right now, as it did in the past and as it does right now. Because right now it is flawless. It is 100% degree of accuracy. That means it is basically Bitcoin's Bible. If we did break it and then reconnect it, who's to say we couldn't break it again? But yes, hypothetically, it's possible for trends to see deviations and then returning to the actual trend in future. That happens quite often in financial markets. It just makes the trends less reliable in future, and it means you have to be more cautious around them. Thanks for watching, guys. I appreciate you making it this far into the video. Hope you found something useful in there. If you did, of course, subscribe, comment, like, all of that stuff if you were interested. And also, I'll just end off with a couple of things here. First and foremost, the VIP group on Telegram. If you're interested in getting altcoin trading signals 4 times a week, you can get them on Telegram. You also get access to a group chat with 160 other VIP members. Got a couple months left there to take advantage of it. It is ending soon, so do that if you're interested. And then also, as we have an exchange here that has never been hacked before in 3.5 years of being on the market, that is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses and you'll help out the channel. I appreciate that, guys. Let's get into the content.